Okay, so this whole video will actually be recorded again for those of you who are, I think most of you guys actually came from the Telegram. So again, for those who actually missed this session, I will actually upload it onto the Telegram in 1 or 2 days time. So if in between you gotta go and sleep, and stuff like that, don't worry. I actually upload the whole content in 1 or 2 days time inside the Ultimate Investor SG Telegram group. And okay, so first of all, thanks everyone for coming tonight. Okay, again, this video is this special Q&A session is for you guys because we actually have not 600 members as of today. And I think we're actually really excited, from the team of Ultimate Investing, because we started this channel about a month back, slightly more than a month. And we actually have about 600 over people. And I think most of them actually came from, your friends, your referral, and some of you guys might not have even seen me before. So this is probably the first time. So I just want to check, okay, how many of you actually, if you know me personally, or at least you have seen my video in some sense, just put a 1 in the chat group. If you have not seen me before, this is the first time you see my face, this is the first time you hear my voice, just put 0. So I have a rough guide as to who I have met before and who I haven't met before. Okay, interesting. I think quite a number of you guys actually have seen me before. Okay, and we have about 20 to 30%, 20 over % of new people who have never met me yet. Okay, I think it's a good match. And right now we have 74 participants with us as of now. So again, thanks for coming on tonight. Okay, again, I think this afternoon, 5 p.m., we had a major news. Okay, our circuit breaker is going to extend for another. Mommy, I was expecting. Your plastic wrapper. Okay, just give me a minute. Let me just mute and make sure that we are all muted. Yes, I think this afternoon, PMD has actually mentioned that we will be going for another 4 more weeks of circuit breaker. So again, we just want to be prepared. So I think one of the key topics that I wanted to share, later on I will actually do a quick introduction. Okay, later I'll do a quick introduction, and after my introduction, then we will actually start with the Q&A. So again, very important, if you have any question, okay, please put it into the chat group. Please put it into the chat group, or just store your question, and later on, actually, we will actually answer your question. Okay, so without further ado, okay, let me just go straight and dive into the presentation that I actually have for you guys. So let me go to my PowerPoint. Okay. Okay, just give me a minute to set up my PowerPoint. Okay, are y'all able to see my PowerPoint? If you can see my PowerPoint, can you put PPT in the chat group? Okay, fantastic. I think you guys are able to see it. All right, fantastic. Okay, so once again, actually, whatever content I actually shared with you today, I've actually shared it with our Ultimate Investing community. So we actually do a quarterly update, to actually share about the market updates. So for most of you guys, probably this is the first time you have actually seen this presentation. So again, this is our personal view of the overall market. I'm going to give you my personal view on the second quarter of the market. And at the same time, later on, I'm going to answer some of the questions. I think some of you are asking like what shares I'm looking at, what are some of the shares in my portfolio. So feel free to put it into the questions Q&A later on, and 9:30 we're going to go for live trade together. So now let's talk about the table of contents. So of course, okay, I'm going to talk about the market review for first quarter that has already passed, January, Feb, and March. And of course, moving forward, we are going to talk about April, May, and of course, June. So this is going to be the market forecast, as well as very important, what is the game plan and strategies that I have for the current market situation. So I think this is something that you guys are also looking forward to. So again, before I start, I just want to put a disclaimer over here. That means whatever that is shared here does not consider each and every one risk profile and risk level. So again, if you want to use the information here, you are allowed to, but again, be fully responsible for your own investment and actions. Again, do your own due diligence, okay? Because why? Nobody cares about your money more than yourself. So whatever money that you invest in the stock market, that is your hard-earned money. So please do your own due diligence. Do not just simply copy because I shared it tonight. All right? So if you are okay, if you accept this disclaimer, can you just put okay into the chat group? I gotta make sure that you guys put okay before I can actually move on. Okay, fantastic. So I'll be looking at the chat group. I have another screen with me. So I gotta make sure that you guys are all okay before we move on. All right, fantastic. I think you guys are all okay. Amazing. So now, when I look at the market, okay, and do a review, I actually want to look at it from both perspectives, from the fundamental perspective and also from the technical perspective. What do I mean by this? Okay, let me explain further. So fundamental, that means we want to look at the fundamental of the whole market, of the economy, and why. Later on, you will realize that I am looking a lot at the US market. Okay, pretty much because the US market affects how the other country also react. So to give you an instance, I think you guys actually came from the Singapore stock telegram. So what happened is that when the US market go up, what happened to the Singapore market? Singapore market will also go up together. And when the US market actually drop, what is going to happen to the Singapore market? The Singapore market will also be influenced and the Singapore market will drop. So pretty much, everything, even in Singapore, is highly influenced by US. And that is why for this analysis, I actually use US as the thing that I will be looking at. So fundamentally, we are going to look at these three things. First is the GDP growth, okay? And secondly is the unemployment rate in the US. And of course, the valuation of the whole economy of the S&P 500, which is the 500 largest company in the United States as well. So let's start with the first one, okay? When we look at GDP growth, okay? So what happened is that positive GDP growth basically means that the country is growing in terms of productivity, in terms of the overall economic. We want the country to have a positive GDP growth. So what happened when the GDP growth forced to become negative? So we can see from the bottom chart, the black color candle. So this happened in 2008, the last financial crisis. We can see that when the GDP growth became negative, what happened to the share price? The share price also dropped significantly. So it also represents a recession is actually here because the country stopped growing. So when the country stopped growing, the share price is just, telling us what is going on in the overall market situation. So if GDP growth negative, it is actually a huge red flag to tell us that, hey, the recession is here, price is going to continue to fall. Okay, so that is something that we want to look out for. So again, this is the upcoming GDP. Okay, I don't think it is out yet, but it is already forecast to be negative. It is already forecast to be negative. The only thing is how negative it is, we do not have the real result as of now. But again, this data is actually direct from the US Bureau of the Economic Analysis. They have already released this analysis and this forecast result to be negative. So that is why, of course, right now we can see that the market has also reacted. Market has dropped close to 20% as of today. So next, we want to look at the unemployment rate. Okay, unemployment rate. So once again, if we look at the top white color chart, we can see that in year 2000, okay, there was a rise in the unemployment rate. And what happened in year 2000? If you look at the chart below, that is where we have the dot-com bubble. All right, that is where we have the dot-com bubble. So you can see the share price has dropped significantly after the unemployment rate increased as well. So on the right, on the white color, you can also see a number like 4%, 5%. So that is actually percentage. Okay, so that is percentage. So we can see over here, I have also indicated this thing called the Economic 101. So for me personally, I used to study econs, okay, but I'm not a good student. I didn't score A for that. Okay, but this is my personal understanding of how economics actually work. When there's high unemployment, what happens is that it means that people are not getting the income. So when people are not having the income, are they going to spend more, or are they even going to spend? Probably not. They are going to spend on essential items only. Okay, like our basic food, our rice, and now even toilet paper is an essential item. And again, when there is less spending, okay, what happened to those businesses that used to actually earn the money? you realize that this business, they're not able to actually earn money as well. So that's going to impact their business as well. And when this business doesn't have the money, do you think they will be able to sustain their employer or employee? So once again, if they cannot sustain the business, they are going to retrench more. So that will repeat the whole cycle. So you can see that there's a ripple effect, coming from unemployment rate. So again, over here, we can see that rising unemployment rate, it is definitely a huge red flag. It is a huge, huge red flag. And what happened right now, okay, if you have been following the news, every Thursday, the US will release the latest unemployment figure. Right now, as of last Thursday, we are at 22 million, if I'm not wrong, 22 million US citizens are unemployed. Okay, 22 million. That is one of the highest figure that we have actually seen, since I think the last 50 years. It has never been so high. So we are at an unprecedented rate of unemployment rate that we see in the United States, and it is still growing. So this coming Thursday, again, something that people will look at, investors are looking at this figure. What is the percentage? What is the number that's coming this coming Thursday? So unemployment at all new high again. You can see over here. This was old news. So when I actually done this, that was about 1 month ago, 3.3 million. Coronavirus job loss could hit 47 million. We can see right now we are already at about half of it, 22 million. So again, these are all based on forecasts, but right now we can see that we're actually moving quite closely to 47 million. Who is playing mahjong? Okay, got me playing mahjong. Okay, I've already muted. Okay, back to the presentation. So what happened is that, okay, now we look at valuation. So valuation of the market is basically telling you whether the market, is it expensive or is it cheap? So we can see over here, based on the dot-com bubble as well as the subprime crisis, which happened in 2008, both happened above the 20 line. So basically, we can see that PE ratio of the Schiller PE above 20 is telling you that the market is expensive. So right now, this was actually the previous record at 30. And let me give you the latest figure, is about 23. So even up as of today, we are actually still considered pretty expensive, okay, because we are still above the 20 line. So if you ask me whether the market, is it cheap or is it expensive, I'll say the market overall, especially the US market, is still relatively overpriced. So there's still room for the price to actually come down based on the valuation of the overall market. So this is again based on Schiller S&P 500 PE ratio. Okay, so that was all fundamental. So right now we're going to move to technical. Okay, so technical again is one of the things that we look at in ultimate investing. We look at chart, we look at trend. So I just want to introduce you to this thing called the exponential moving average. Some of you guys have already watched my video, okay, the video on how I earn from the bear market. So I actually introduce you to this thing called the exponential moving average. So again, today I will actually touch on that as well. So we have the EMA 50 and the EMA 200, which is represented by the yellow line as well as the white line. So what happened is that when the yellow line cuts down the white line, it is telling you that the trend is coming down, the price is coming down. So this happened in year 2000. You can see that the yellow line cuts down the white line, and that is the point whereby you need to start selling. It means if you have bought stock previously and you see a yellow cut white line, you need to get out of the market. Okay, for those of you who know how to short the market, that means you know how to bet that the price will go down, then of course you can benefit from it. You can make money even when it goes all the way down. So you can see the ring over here, yellow line cuts down the white line. So this happened again in year 2008. Okay, during the last subprime crisis, you can see same thing happen. The yellow line cuts down the white line, and that is the point to tell you that, hey, you need to get out of the market. All right, if you have stock, sell it away. If you want to make some money, you can actually short the market. This is a sign for you to short the market. So key thing over here, you can see EMA 50 cutting down the EMA 200. It is a red flag. It is a red flag. So once again, we look at what happened right now. Okay, 20th March 2020, which is about a month ago. We can see that the EMA 50 has crossed the EMA 200. Okay, the EMA 50 has already crossed the EMA 200. So what does this indicate? Again, you make the judgment, like what I mentioned. Okay, 50 cuts 200, it's time for you to get out of the market. It's telling you that, hey, price is going to go down. So that is my analysis based on the fundamental as well as the technical portion. All right, so right now I'm going to show you based on what is the forecast, the market forecast for second quarter 2020. So are you all ready? Are you all ready to hear this part? If you are ready, can you just put in forecast? Can you just type in forecast so that I know that you are ready? I just got to make sure that you guys are still here. Huh? So if you are here, if you are ready, just put in forecast. Okay, fantastic. Okay. How many people do we have right now? Oh, we have 98. Okay, fantastic. So we have 98 people. I cannot imagine, in the past, how can we have 98? How can we be talking to 98 people? But right now with technology, okay, right now I'm talking to 98 people and 98 people are hearing me over this thing called Zoom. So again, I love this company Zoom. I personally own this company Zoom as well. So I'll be holding it, even though there's a lot of bad news, people hate it. But once again, you can see that good company always get a lot of enemy. Okay, so when you're good, people will talk about you, but it's okay, just continue. So this is the market forecast for second quarter 2020. All right, so we can see what happened in year 2000, the dot-com bubble. The market from top to bottom, it has dropped 50.48%. Okay, I repeat, in year 2000, from the highest point before the crash to all the way to the bottom, the market has dropped 50.48%. And when I talk about the market, I'm referring to the S&P 500, which is the US market overall. And now coming back to 2008, same thing from the top to the bottom, you can see that the drop was 56.79%. Okay, so once again, history repeated itself. So like I said, the history does not represent the future, but once again, we can use the history as a guideline, because why? History always repeat the same thing. Human psychology, the stock market is all about human psychology, and human doesn't change, but what happened is that during every crisis, people will always say that this time round is going to be different, this time round is going to be different, this time round is going to be different. But what happened? When you look back, you realize that it is always the same thing. Okay, it is always the same thing. So sometimes, try not to overreact, try not to think too much. Okay, just use the guideline as a reference. And then, of course, with some additional help, which I'm going to share with you, you'll actually be doing quite decent in the stock market. So this is again in year 2008. So can you see the yellow line cutting down the white line? So another point to take note is, when do you actually get in the market? You can see in year 2011, you can see that the yellow line cuts back the white line. So that is actually a clear indicator to tell you that, hey, you can actually go back into the market. So some people will tell me that, hey, Bowen, but then the lowest price is 2009. If I go in at 2011, am I too late or not? Because I'm like 2 years out. So I just want to guide you back. If you have bought in 2011 and you hold all the way until 2020, how much money would you have actually made? You will make a lot of money already. So sometimes it is okay to be late. Okay, so being late is also your insurance. Okay, so this is a very, very important thing. Sometimes being late is actually your insurance, because it's telling you that, hey, this is a confirmation that right now the market is already going up. If you go in now, you are safe. So that is something that is very important over here. So take note. So if we look at the current market right now, the highest point we actually reached is $338. Okay, $338. So if I take the highest point and I draw a 50%, okay, I just talked about a 50% drop, we will be looking somewhere around the S&P 500 at the price of 169. Okay, so this is the point that I will be talking about. So again, for those of you who have listened to my sharing previously on the Singapore market, okay, or some of you actually attended my live session, I actually asked you all to start buying some Singapore stocks already. But remember, I told you guys that you want to go in 3 different trenches. The first entry is basically right now. Basically, if you find any good company, undervalued company in Singapore, just go in now. The second entry that you want to go in is when you see this thing, the S&P 500 drop to $169. Okay, when the US market dropped to $169, that is where you want to put in the other 33% of your money into the stock market. It could be Singapore market, it could be the US market. Okay, but again, this is a guide for you, a 50% drop in the S&P 500. All right. And again, I just want to share the last part, which is the game plan and strategies for the current market situation. So once again, okay, something different about this current crisis I have shared with you guys quite a number of times is that if we compare the current crisis with 2008 and if we compare it to 2000, which is the dot-com bubble, okay, personally, I find that this current crisis is way more serious. Okay, this current crisis is way more serious than 2008 and 2000 dot-com bubble. Why do I say that? Okay, as we can see, in year 2000, we had the dot-com bubble. So which are the companies that are mainly affected? You can see those are companies that are in technology, companies that are dealing with IT, website, and stuff like that. So those companies go to a very, very high price. So it's more of an overvalue or rather internet bubble. So the tech company was affected during year 2000. And if we look at year 2008, the last crisis was actually a banking crisis. So again, the bank was hugely affected. Citibank dropped to $1. Okay, this is something that people like to say. Citibank dropped to $1. So that was a banking crisis. So again, the whole impact come from the bank. Certain industry are affected as well. Okay, but if we look at the current crisis, current market, we are facing a health crisis. So the first thing about health crisis is that we do not know how long this thing can drag on. Okay, right now we can see in Singapore this thing has been dragging longer and longer and longer. Same thing that happened in the US, in the Europe. Okay, number of cases is starting to decline. But until we have a cure, you realize that this thing doesn't just go off like that. The moment they start to open up, the moment people start to go back, business start opening, what happened? The number of cases could shoot up again, just like the cases of Singapore and of course the case of Japan as well. The moment people start to interact with each other, the virus continue to spread, we could see another spike. And that is something that US and Europe, as much as they want to open up their whole economy, you realize that some of the governors, they are actually trying to extend. They try not to open up because they understand the risk of opening up right now. Right, so that is the health crisis. So what happened in the health crisis is that in order for the economy to recover, people need to start spending so that the business can start to make money. But right now, are we actually spending? You realize that other than the basic necessities like NTUC, Sheng Siong, right, market is open. So other than NTUC, Sheng Siong, and of course we have some of the restaurants that are doing relatively okay. Other than that, you realize that people are not spending. People are not going to the market. People are not going out. People are not going to work. So everything is a stalemate right now. And if you look at what happened currently to the oil crisis, why do you think there's an oil crisis right now? And again, this is the first time that happened. Oil actually dropped to literally a negative zone. And that issue actually came because of low demand. It came because of low demand. Right now, nobody is actually using oil. And who are the main oil, who are using the most of the oil? You realize that they are what kind of company? They are the airlines, they are the cruise company. Right now, do you see any plane flying? Do you see any cruise right now? Again, you can see those are the industry that uses up a lot of oil. Even for our normal car, a number of people traveling right now is very little. I would say easily a 50% drop. So the demand for oil is at an all-time low. And of course, we look at the US and Dubai and the UAE, they have been producing the oil. The supply is constant, but the demand has dropped significantly. So what happened right now is that they have no place to actually store all this excess oil. And that is why they are even giving you money if you have place to actually store their oil. So that's the current crisis. But just to think, what causes this oil crisis is again the health crisis. it started because of low demand. So once again, we're going to see that even the retail sector is going to take a big hit because nobody is going to buy Nike, nobody is going to buy your Adidas. Okay, people might go online to buy, but the sales is just going to drop significantly. People are not going to start to buy branded goods, as of now. People are not going to buy a mattress, for example, your favorite Sealy mattress. Okay, are you going to buy mattress at this current situation? Probably not as well. So these are the companies that are going to be highly affected. Even our casino, even our hotel industry, our cruise industry, airlines, hotel, all this industry, they are heavily affected. Okay, heavily affected. Okay, so again, if you ask me, the market right now is really crazy. So what is my game plan? Okay, this is my game plan. So listen up. So I'm going to take advantage of the downtrend. Basically, is to boost up my portfolio so that when the market bottom, which is the 50%, remember 169, this is 3 magic figure. Okay, so that when the market reach 169, I can actually go in and I just want to ride the trend up. Okay, my game plan is actually to ride the trend up. But for now, I want to short the market so that I can actually boost up my portfolio when it drops further. So as a result of that, I'm actually allocating like less than 50% of my portfolio for all position. In fact, it's actually 20 to 30% in that range. Okay, and I'm actually happy with my 30 to 50% ROI, even though I'm actually allocating a small percentage of my portfolio. Okay, but actually using options, I'm able to still get pretty decent returns over the past few months. In fact, I think last month, I had my best month of 50% ROI in that 1 month. So again, this is my game plan, but I just have some important news to also share with you guys, important things to take note. Is that again, there are many people, there are many gurus in the market, okay, on Facebook saying that it is the best time to go all in. So please do your own due diligence. Okay, why do I say that? It's because remember, they can actually share with you the methods. Whether is it, they tell you that right now we are already at the bottom, please go in and buy as much as you can. Or whether is it the market is still going to crash further. Even today, whatever I share with you, okay, please do your own due diligence because why? Remember, I can share with you the method, but I cannot pass you my experience immediately. Okay, so you realize that there are cases whereby the guru share with you the certain information, but you lose money, but in the end, the guru still make money. It's because he could have actually changed his strategy along the way. Okay, and of course, you're not that updated or you might not know how to handle a change of situation. So that is very important. So if you go all in without having the proper knowledge, 2 things can happen. Okay, either you whack the market and you make a lot of money because you're right, or the market is going to whack you upside down. All right, so once again, if you're totally new to investing, do it slowly. Okay, just allocate about a portion of the money that you are willing to allocate for investment. Please don't sell your house and sell your car just to invest right now because you want to take advantage of this situation. Okay, please do not do that. So strategies right now, okay, trend direction in terms of the long-term trend, I'm talking about the next 3 to 6 months. Definitely, I'm looking at the downtrend. Okay, because again, the EMA 50 cross 200 is still happening. Short-term trend, okay, personally for the last 2 days, we see a 2 red candle. So again, for the next 1 week and 1 to 2 weeks, I will say that short-term trend is also down as well. And of course, action plan. Okay, so some of the action plan that you can do, if you know how to sell options, that is something that is really good, selling options because of the high implied volatility. Okay, so this is a quick, okay, back to here. This is a quick guide of what is happening right now. So we are at this particular portion. Let me just draw. So right now we are here. Okay, right now we are here. So tonight open, we are somewhere around here. Okay, so tonight open, you will see a red candle over here. So I think one of the questions just now that was mentioned was, could this be a V-shaped recovery? Okay, this is my personal sharing. It is possible. However, in my personal opinion, probability are pretty low of a V-shaped recovery. Okay, why do I say that? Again, because business are disrupted way worse than 2008 and 2000. And secondly, the virus is still out there. Okay, the number of deaths and the number of infected cases are still growing. So that will always be the key thing that the people, the country are trying to solve. Okay, instead of trying to fix the economy, the first important crisis is always to fix the health crisis first. to make sure that the virus stop growing and stop increasing. And of course, if you look at past record, average recession happened for 11 months. Right now, we are actually in the second month only. Okay, second, coming to the third month. So we are still way ahead, okay, as compared to the average recession of 11 months. So don't worry about it. Okay, if you ask me, could this be a V shape again? Highly unlikely lah. Highly unlikely. So this is again what my personal view. So you can see I'm always constantly looking at this white line and the yellow line. If let's say I see my yellow line cutting up the white line, then that is where I will start to go in. If not, I will wait for my number. Can you tell me what is the number that I'm looking at? What is the number over here that I'm looking at? Can you put it in the chat group? What is the 3-digit that I'm looking at? Yes, fantastic. 169, 169, 169. That is the number that I'm looking at, 169. So, okay, before that, for me, this is my take. This particular red arrow over here, I'm expecting the price to go down in the short run. Okay, but again, market don't go down in one direction. It could go down, come back up before it goes down more. So this will be my short-term strategy to look at. Okay, so coming to the strategy, selling options. Why sell options? Again, because the implied volatility is way too high. Okay, you are able to get fantastic premium by selling options. So later on during the live trade, this is exactly what I will do. I will actually do this on oil counter. Okay, just now I have to take a quick look. I think some of them are quite attractive. So this is what I'll personally do. Again, I will just do based on a small percentage of my portfolio, probably about 1% or maybe up to a maximum of 2%. So even for those who know exactly how to do it, please do not put everything in. Please don't be greedy and say, hey, wow, very, very high premium and then go all in. So selling option allow me to collect 10 to 15% monthly premium by giving a promise. So right now, selling option, you can get 10%, easily around 10%, every single month. Right, so amazing opportunity right now. And later on during the live trade, I just want to share with you guys this, how to sell option. So again, this is my last slide for my sharing before we go for a quick Q&A. I think very likely we're going to delay tonight until maybe about 10 to 10:30. So just stay on for those of you who are interested in the live trade. So again, for those of you who have not joined our our Telegram, okay, please join t.me/ultimateinvestor_SG. And if you are totally new, okay, this is the first time you have seen me, you have not watched any of my other video, please watch this video, okay, bit.ly/earn from the bear. Okay, you will get a lot of gold nuggets inside. All right, and of course, just one last sharing with you guys. If you guys are interested to know how to invest in the US market, okay, how do you short the market, how do you take advantage of the bear market right now? All right, just watch the second video, bit.ly/earn from the bear. Watch the last 30 minutes, okay, if you're interested to join us. Okay, everything is inside that video as well. So right now, we're going to take Q&A. I'm going to spend about 15-20 minutes to answer some of the questions that you guys actually have. Okay, first of all, let me see what are some of the questions that you guys actually have. Okay, so first of all, I think I just want to answer the first question from Teck Hui. What is the view on the current market, and is the V-shaped recovery into bull? Again, I think my sharing, I've actually touched on it already. So short term is downtrend, mid term is also downtrend. V recovery into bull, like I said, is unlikely. So would you mind to share some of the great stocks in your portfolio and how much cash are you holding right now? Again, most of my strategy right now is actually more on shorting. It means I'm expecting the price to go down. So I wouldn't say that they are great stock in my portfolio. Okay, I wouldn't say that they are great stock, but I'm actually expecting the price to drop even more. So some of them are cruise company. Then I have some hotels, and I have actually banks as well, especially US bank. So Singapore bank, I think if you are comfortable with the dividend that some of the Singapore bank is giving, actually they are quite attractive for Singapore bank. But US bank, they don't really give much dividend. And you can see based on historical US bank during crisis, they are highly affected. Okay, so I'm actually shorting some of the US bank still. Some of the good stock, I have one which is Zoom. Okay, and I'm actually quite interested in companies like Amazon, Google, because I think even after this crisis, like right now, Amazon is earning a lot of money because everybody is buying online. Everybody is taking advantage of the online space. Okay, but again, if you look at after this crisis, more and more people are going to jump onto Amazon. Okay, and they actually have a huge growth in front of them. And if you understand their business, you know that they're actually moving into cloud as well. They are setting up a lot of database. So everything now is also on cloud, on database. So that is a huge area that I think we can take advantage of from Amazon as well as Google as well. So yeah, I see how powerful this uh, crisis actually is. So this crisis, I would say that has changes a lot of how we actually live our life. Okay, people are really moving into online business, are going online. So one of the very interesting report that I actually hear recently is talking about US bank. Okay, right now, Goldman Sachs, okay, one of the largest bank in US, 98% of their staff are working from home. Okay, 98% of their staff are working from home and the business are still running as per normal. So can you imagine after this crisis, okay, the banks will realize that, hey, honestly, I don't need so much offices. I don't need my staff to actually come to office. I can actually ask them to work from home. And I think from an employee point of view, you realize that, hey, actually at home, I can deliver the same thing that I want to deliver. Why do I have to go to office to do my work? You know, if I do it at home, I can be more productive because I don't have to spend time to travel. And if I have kids, actually, I can also take care of my kids at the same time. So this is going to change a lot of things, okay? Because business will realize that, hey, we can actually work from home, okay, with the technology and stuff like that. And of course, they might realize that, hey, I don't need that much manpower. Okay, I can actually cut down some of my manpower. So we do not know what will happen even after this crisis, how business actually operate. But I can tell you that things are going to change. Okay, even for myself personally, my dad, okay, he don't actually buy online. Okay, but because of the COVID situation, he started to explore online shopping. And the moment he tried for the first time, okay, he bought three items on the same day. He become kind of addicted to it. He say, wow, so cheap. You know, it's only like $2, $3, and they even deliver to your house. You know, so right, even after this crisis, do you think he will continue to buy things online? The answer is definitely yes. Okay, and people are going to buy food online, delivery. So all that is going to change as well. So that is my view. Teck Hui, okay, okay, let me see any other question. What is the opportunity with current plunge of oil price? Later during the live trade, I will actually share. Okay, but again, if you ask me right now, oil price is almost at rock bottom. Okay, again, it is almost at rock bottom. Again, the situation is because of the demand, low demand. Okay, but will oil price remain low? I would say that Russia and US and all the supplier, they are definitely at one point they're going to reduce the supply. Okay, because they understand that this thing can drag on for quite some time, even months or even up to end of this year. So they're going to reduce the supply. And when they do that, okay, what happens is that would actually push up the price of the oil as well. All right. So I think end of the day, we people are still using oil. It's just how much. And I think in some parts like China, they have already started to open up. So subsequently, when US open up, Europe open up, the demand for oil will start to go up. So when that happens, same thing. Okay, that when the demand start to pick up, the oil price will actually start to go up as well. All right, so again, just to take note, we are looking at oil prices. We are not looking at a company. So company can go bankrupt, but oil price cannot go to zero forever unless we totally stop using oil. All right, so all these commodity price, they go up and down in cycle. So like I said, right now we are at rock bottom. So will it stay low? The only risk is it actually stay low for a long period of time. All right, that is the only risk. But other than that, I would say that it will actually rebound if you give it some time. So from Sriram, can we own oil as commodity now as the price is cheaper? Again, like I said, you go for ETF. And later I'm going to show you some of the ETF that you can actually buy for oil. Anything else? Let me see. Keep your question coming. Okay, from Ben, where can I find your Telegram? So I think you have the answer, t.me/ultimateinvestorsg. Okay, from Yo has a private message. Okay, just don't mind if I share with everyone. What is the difference between PE and Shiller PE, and where can I find the Shiller PE? Okay, so very easy. Just go and Google Shiller PE space S&P 500. You will get the answer. So everything can be found on Google. So what's the difference between PE and Shiller PE? It's actually the way they calculate the earnings. So Shiller is actually a real guy. So he actually used a more recent earnings to calculate. So slight difference, but you realize that Shiller PE is a lot more accurate. Okay, it's a lot more recent and it's a lot more accurate as compared to PE. PE is a bit like a lagging indicator. So yeah, use Shiller PE basically. Okay, let me see what else. Will you consider to short from next? Will you consider to short SPY now? I personally don't short the index. I like to short individual stock. Why do I say that? It's because there is a possibility that the stock can drop 90%. Okay. You can look at a lot of banks, a lot of casino, based on the last crisis, they actually dropped 90%. Some of them even dropped like 95%. But will you ever see an index dropping 90% or 95%? Not possible. So as a result, end of the day, how we make money is when the percentage drop is bigger, we make more money. So looking at the percentage or the potential percentage drop, it makes more sense for me to go for a stock to short rather than the index to short. So that's my answer for next. What are some of the US stock that you are looking at? Again, I'm from Sealand. Most of the stock that I'm looking at is more on shorting. So again, those are the companies that are highly affected, like cruise, hotel, etc., etc. What is your portfolio like? From Dennis? Do you invest in both Singapore and US market? Okay, I would say that right now, 95% or rather maybe even 98% of my portfolio is in US. Okay, so Singapore, I used to invest, I started from Singapore market, but right now I don't really actually look at Singapore market. Why? Because I'm comparing. If I have the same amount, a fixed amount of cash, which market is more attractive? And for me, US market is a no-brainer. There's just more profit to be made from the US market. So Singapore market, I would say that it is good for people who wants relatively lower volatility. Okay, something that you can see every single day. For example, you buy into companies like the DBS, UOB, OCBC, or even Singtel, Sheng Siong. These are companies that we are familiar. We see them every day. So for people who actually just started out, and why we actually created this Telegram to talk about Singapore stock, is again because if you're totally new, this is something that's more relatable to you. If I'm talking about, JP Morgan, Alibaba, and even some of the US company, you'll be like, hey, I'm not familiar. For example, Walmart. I have not been to US. I have not bought in Walmart before. I don't know what you're talking about. So, yeah, if you're starting out, start from Singapore. It's totally fine. And then from, let me see, what other? From Lawrence, are you doing all bearish option trade? Yes, actually I'm not using a lot of percentage of my portfolio right now, but yeah, I'm actually more into bearish. I have like one bullish trade, which is Zoom. Yeah. So Zoom is actually a long position. That means I'm expecting Zoom to go up. So when I say I'm shorting, are you buying put option? From Dennis, yes, I'm actually buying put option. Our local banks, good to buy or overvalue? Okay, so this is for Shu Wei. Yes, do refer to the Excel spreadsheet that I actually allocated. So for Singapore Bank, very simple, just buy them when the dividend is more than 5%. And right now, okay, I think all three Singapore banks are giving more than 5% dividend yield. Okay, so just imagine if you put your money in the bank How much are they giving you? Maybe 1%, 2%. But if you invest in a bank, they're giving you 5%. All right. And local bank, I would say that they actually have quite a healthy cash reserve. So will they be affected by this crisis? Definitely. We can see that there's a huge number of people deferring their mortgage loan. And when more and more business are actually going bankrupt, there will be more bad debts for the local bank as well. Okay, but once again, I think Singapore Bank have a huge and healthy cash reserve, so they will be able to sustain this crisis. And if in the worst case scenario, the government will also come in and support the bank as well, because without the banking system, the whole economy will actually fall apart. So again, for Shu Wei, things to take note is, although I say that local bank is good to go, please do not go in with all your money at one point, at the current point of time. Just go in with 1/3 of whatever you are willing to allocate. And then the next point to go in is 169. I remember 169. So Dennis, what is the difference between GOOG and GOOGL? Okay, go for GOOGL. Only one of them is correct. The other one I think is a different one. So go for GOOGL. Okay, so some of the more technical questions I'll probably skip for now. Like, for example, do you buy option near to the earnings date? For me, no. I'll go for actually a 3 to 6 month option. From May, when is the best time to buy option? I would say that there's no best time. Okay, there's definitely no best time. Dennis, what platform do you use to trade option? What is your commission fee that you pay? I use personally TD Ameritrade. I'm paying about $1.25 per contract for TD Ameritrade. Yeah. Okay, so I think I finished pretty much most of the questions. So I think you guys are definitely waiting for the live trade, right? Okay, so if you are ready for the live trade, can you just put into the chat group live trade so that I know that you are ready? Okay, live trade, live trade, live trade. Just put into the chat group live trade. Okay, so once again, you can see that my lighting and everything is red color because today the market actually dropped. So yeah, red color shirt, red color light, everything is red tonight. So how can we benefit even when the market goes down? Okay, let me share with you. Oh, GOOG, sorry. Yeah, thanks, Victor. So Google is GOOG. Underwear also red. I'm not too sure. Okay, cool. I think you guys are ready. Okay, so how do I continue? Okay, so right now I just want to share with you guys a website first before I go to the live trading portion. Okay, so this is the website that I just want to share with you guys. Okay, this website is called Finviz, Finviz. So when you come to this particular website, okay, what I want you guys to do is click on this thing called Maps. Okay, Maps. So for example, today we are looking at, so you can see what happened when you first come to this thing called map. You realize that there's only two colors that you will see. One is red color, one is green color. So right now, together with my team of my room and my t-shirt, everything is red color. Why? Because everything has dropped. You can see Google, Microsoft, JP Morgan, Bank of America, Visa, Amazon, Apple. Literally everything has dropped except for Netflix. Okay, so because you guys are still watching Netflix, yeah, so Netflix continue to shoot higher because they're still making money even with this COVID-19 going on. Right? So why I want to share with you guys this is because very simple. For example, today we are looking at oil. So some of you guys might be totally new. You do not know what are some of the companies that are dealing with oil. So when you come to this, you realize that they actually segregated based on industry. For example, services, technology, tech company, Google, Facebook. Then we have financial, which are all the banks, JP Morgan, Bank of America. You have your consumer goods, okay, things that we buy, things that we use, Apple. So if you look at over here, basic materials, you will be able to see this major integrated oil and gas. So you see two of them. One is XOM. If you look at the name over there, it's ExxonMobil. I'm sure we are all familiar with this company. And we have Chevron as well. So the larger the cube, it represents that the larger the company is in terms of the market capitalization. So the bigger it is, yeah, the larger the cube, the bigger it is. So you want to invest in a big company or a company that you're familiar with. So we try not to go for the small ikan bilis company. So this is for major integrated oil and gas. And again, you can see that there are independent oil and gas company as well. Then we have oil and gas refining and marketing, chemicals. This is oil and gas pipelines. So let me ask you, out of the oil and gas, right? I mean, there is the pipeline, there is the refining, and there is of course the direct independent oil and gas. Okay, with the oil rig, who do you think is going to be the most affected? Okay, who do you think is going to be the most affected? Okay, can you put into the chat group? Or which company do you think is going to be highly affected in the oil industry? Let me just do a quick check. So some of you guys put refining. Okay, ExxonMobil, refining, extractor, integrated service. Okay, so different people have different view. Okay, so let me ask you. So when the oil price drop, right, who is going to be the most affected one? It's definitely going to be the company that drill the oil. Okay, because they drill the oil, they want to sell it at a high price. But right now, the more oil they drill, the more money they have to give for you to keep their oil. Okay, so they are going to be the most affected one. Why do I say that? As compared to refinery. So refinery, you realize that oil and gas refinery is irregardless whether the price of oil and gas is high or low, they are going to charge the same price to refine your oil. All right, so you realize that their impact is actually lesser as a refinery. Okay, as well as of course we have like some of the pipelines as well. Okay, because all these are done beforehand. That means they have already been selling the pipelines and all that. So the drop in the oil price doesn't directly impact them as much as we can see the independent oil and gas. And of course, we have the super huge oil company, which is ExxonMobil as well as CDX. Those are super huge, super huge oil company. So what happened is that, right, you realize that there's so many different companies that you'll be like, hey, so which one do I actually go in, and stuff like that. So I just want to introduce you to this thing called ETF. Okay. So what happened is that there's this ETF called the USO. Okay, it's called the United States Oil Fund. So the USO fund, as you can see over here. Okay, I'm not sharing that. Let me just share with you guys. Let me just change my screen. Okay, yes, you should be looking at this. So the USO, this three alphabet USO, okay, is actually the United States Oil Fund. Is an exchange-traded fund that attempts to track the price of the West Texas Intermediate Light Sweet crude oil. All right, so this is one of the ETF that we can actually invest if we want to invest in oil-related company. All right, especially we want to look at the oil price. So this is something that I'm actually looking at. Okay, USO. So let's take a look at the chart of USO. USO. So we can see that this particular ETF, it has actually fallen very significantly. Okay, very significantly. When I say that, if you look from the top to the bottom, it has dropped how many percent? 75%. Okay, it has already dropped about 75%. And like I said, right now, oil price, I would say that it's actually, again, pretty much at the lower side. Will it go to zero? Unlikely. What happened is that when they talk about negative, they're talking about the futures. But the exact oil price doesn't exactly go to zero. There will still be certain value. And all this will just be short term because end of the day, we look at the oil price, it is always fluctuating. Okay, based on demand and supply. Okay, we can look at the past history. Let's look at the past history. So of course we can see that overall oil has been dropping. It used to be like $100 over. We are no longer at that stage anymore. And then it dropped to somewhere in the range of $40 over. And right now we are at how much? $3. Okay, $3. So you realize that why is there a trend of dropping oil price? Okay, it's again because of the lower demand. You realize that nowadays more and more cars are going into electric. Okay, electric vehicle. People are going into renewable energy. Okay, people are saying that oil is bad resources, so they want to go for clean energy, go for renewable energy. And of course, one of the company that deals a lot with electric and renewable energy is of course Tesla. And we know Tesla stock price has went up significantly because of this shift, right? But again, there will still be a demand for oil. Why? Because after this crisis is over, do we actually have plane that runs on electric? Yes or no? Yes or no? Can you put in the chat group? Do we have airplanes that run on electric or water right now? Nobody know the answer. No, right? Okay, not many. Okay, in fact, I don't think there is lah. Okay, in fact, rocket also requires certain fuel source as well. Okay, but pretty much right now, you realize that the technology, yes, on car, yes, we have electric car, but do we have electric plane? Do we have electric cruise? Big cruise running on electric, running on solar? You realize that not yet. So when the industry, when the demand starts to pick up, price definitely have to go back up. So that again is my personal take. So you can see right now the price is about 320. If you ask me, will the price drop further? I think it is possible because, like I said, right now there is an oversupply of oil. So it could drag on for 1 or 2 months, okay, before the demand starts to pick up, as the economy starts to open up, the demand starts to pick up. But that could be in 1 or 2 months' time before the price of oil starts to go back up. So right now what I want to do is I just want to show you based on the Thinkorswim, which is the US software. Okay, once again, let me just share my software. Okay, are you able to see my software? Yes, okay, great. Yeah, thanks, Lovely. Okay, Lovely say, yeah, my friend in Dubai says that the US news on the oil story is overplayed. Yeah, I think definitely the news definitely like to exaggerate things and stuff like that. So that would also be an opportunity for us. So right now the price of this USO is $3.21. So what happened is that how can you actually benefit from this particular opportunity? So today I'm going to show you one of the things that I'm going to do tonight. Okay, is I'm going to do a sell put to get cash flow from this particular counter. Okay, so what do I mean by this? So I'm going to show you using this particular date. Let me just take a quick look. Okay, so just now I have also mentioned that why is it that right now the market, for those who are a little bit more advanced, why now is a good opportunity to sell option is because we look at this thing on the right hand side. We look at all this percentage. You can see that right now we are at 100, 200, 300%. Okay, so the higher the percentage is telling you that the risk level or the volatility of this particular stock is super high. I give you an illustration. Let me find a solid company that is relatively safer. For example, McDonald's. Okay, McDonald's. So you can see for McDonald's, what is the percentage over here? It's somewhere in the range of 30%, 40%, 50%. So that means the risk or the volatility is about 30%, 40%, 50%. And what happened to USO? You can see it is crazy, man. 368%, 200%, 100%. So when you have such a high implied volatility, what happened is that when you sell an option, you get to collect a lot of cash. So let me use the 24 days as an example. So for example, over here, I can actually sell a $2 put on USO for $2. So what does this mean? Okay, for people who are totally new to option, let me explain to you. when I actually sell this put for $2 and I collect 0.37, I'm going to use my flip chart to illustrate to you guys. Yeah, just remember this figure, 24 days, $2 and 0.37. Okay, make sure you guys are able to see me. Yeah. Okay, what's the premium again? What's the premium? Let me just do a quick check. I've forgotten the premium. 37. Okay. 37. Thanks a lot. Okay, I'm going to just spotlight my video. Okay, 37. Okay, so again, for those of you who are totally new, let me explain to you what it means. So when I sell a put for 24 days, strike $2, premium 0.37, what we are doing is actually we are promising to buy USO. Okay, remember we say that this thing is not going to go down forever. So we want to buy that at a cheaper price. So what we want to do is we want to buy USO at $2. Okay, that means I promise to buy USO at $2. Okay, and in exchange for that, I'm going to collect 0.37. So just imagine right now we are an insurance company. So I tell somebody, I say that, hey, if let's say the price of USO drop below $2, I'm going to buy it from you at $2 regardless of what. Okay, and this promise will last for 24 days. That means I guarantee that I'm going to buy it at $2 no matter what. If let's say USO does go bankrupt, okay, if let's say USO becomes zero, I am still going to pay you $2 to own it. Okay, so that is basically what I mean when I sell a put, okay, for a strike of $2. So in exchange for this promise, because we can't be doing charity, right? So in exchange for this promise that I want to buy at $2, this person is willing to pay me 37 cents. This person is willing to pay me 37 cents. So you can see right now the price of USO is at $3.16. So I give you a few scenarios. So imagine from now until the next 24 days, the price of USO remain above $2. So what is going to happen? There's two scenarios. Okay, two scenarios. One of them, if you can read, is actually this one called expire. Okay, the other word is called exercise. So from now until the next 24 days, if the price of USO remains above $2, this contract, this promise that I have is going to expire. So which means that I collect these 37s for free. So this is my money. I don't have to return to anybody. And my promise is gone. The contract is gone after 24 days. So this promise only valid for 24 days. And what happened if within these 24 days, the price of USO drop below $2? Let's say it drops to $1.80. So if it drops to 180, the other party will exercise this particular promise. Okay, so when he exercises this promise, I have to come out $2 to buy over at the price of $2. But remember, if let's say the price dropped to 180 and I pay $2 for it, but don't forget, this premium that I collect, 0.37, I don't have to return it to anybody. So this is in my pocket. So the moment I sell this promise, I will collect 37 cents. So I bought at $2, I collected 37 cents. So in fact, my cost price is only how much? $1.63. That is my cost price. That is my break even. So anything below $1.63, I will start to make paper loss. But anything above $1.63, I will be making profit within these 24 days. Okay, so remember, although the $2 seems to be small, but in the option world, everything is multiplied by 200. Okay, everything is multiplied by 200. So if let's say today you have $200 in your account, $200 US dollar, you can start to do this already. That means in the event whereby the price drop below $2, your $200 that's inside your account, you have to buy 100 shares. So that means $2 times 100 is 200 lah. So in order for you to do this particular trade, you need to have $200. So if you have $200 US dollar, okay, if your net worth is more than $200, can you just put yes, okay, or 200, just put 200 in the chat group. If your net worth is more than 200 US dollar, just put 200. Okay, if you have less than that, then yeah, probably you need to save up lah for you to actually do this particular strategy. So for $200 capital, you are going to collect 37 cents times 100. You are going to collect $37. So if you look at that, so think of it, with $200, okay, you can generate $37 in 24 days. So if you look at percentage wise, I think just now Victor has already calculated the percentage is 18, how many percent? 18.5%. So you collect 18.5% return in 24 days. If you think that this is good return, can you just put 555? If you think the 18.5% return in 24 days is fantastic return, can you put a 555? Right, so once again, I'm talking about $200. Can you imagine if you have more money, if I put in $2,000, I'm going to collect $370 in 24 days. So people like Warren Buffett, okay, he also do this selling put. But Warren Buffett, do you think he's going to just buy $2,000, $20,000? No. He's going to buy like 200 million or even more than that. So assuming he has 200 million, how much money is he collecting? Just by selling put, he's immediately collecting $37 million in premium. So if it drops, you are going to collect at $2. So what are you going to do with the stock? So for example, let's say worst case scenario, okay, the price really dropped to $1. So I'm going to buy this stock at $2 and I'm going to hold this USO stock or this USO ETF. So what can happen is the worst thing is it drops to zero. Then this ETF basically disappears. Nobody uses oil anymore. But what happened is that after you get exercise, let's say you got it at $2 and 1 year later, the price went back up to $10. I'm not going to go back to $40. Let's just say that it goes back to $10. $2 cost price go back to $10. How many percentage return are you looking at? Okay, you're looking at about 500% return. If it goes back to $10. So again, when we do this strategy, so first of all, we need to know that we want to make sure that this thing, right, the probability of it going to zero is low. If you ask me, is it possible to go? It's possible, but again, it is low possibility. Okay, that if it really dropped to $2, am I happy to own it? Actually, I'm happy to own USO at $2 because I know that there's a limit to how low it can go. Okay, because once the market starts to recover, once the airline starts to fly, once the cruise starts to take in customer, the demand is going to pick up. And when demand is going to pick up, and if they have reduced the supply, naturally the price of oil will go up, will go back up. I don't need it to go back to $20, $40. If it can go back to just $10, I'm happy. Okay, so this is something that we do, that you can actually do in the US market. Okay, so again, like I said, is there any risk? Yes, there is risk. Okay, so again, do your own due diligence. But again, all this is what we call calculated risk. Okay, all these are what we call calculated risk. And there's huge profit to be made, okay, using strategy like this. So I just want to answer a question from Nicholas. If you buy a strike price at $1, is the risk technically lower? Yes. If you want to go for even lower risk, okay, let me just share, okay. If you go for $1, okay, your risk is literally even lower lah. But your the premium that you collect is going to be 17 cents. But in terms of percentage, you can see that it's still 17%, guys. Even if I want to, if today I want to take even lower risk, go for $1, 17% return. Right now it's 18%. Okay, 18%, and your maximum risk is $100. So if you have $100 to risk, this is it, man. Okay. So coming back to my face. Yeah, from Kenny, what is the maximum I can lose? So using the $1 as an example, you promise to buy at $1. So $1 you need to multiply by 100, which is $100. But don't forget, you collected how much? You collected $18. So technically, your maximum losses is only $100 minus $18 is $72. That is your maximum loss. You can't lose more than that. Okay, including commission fee. Yeah, if I include commission fee, probably you're going to lose about $75. Okay, somewhere around that range. Yeah, so that is your maximum loss, $75. That is for one contract. So for some of you guys, probably you can go for more contract. Then of course your number, your amount that you might lose is slightly higher. Okay, but like I said, it's going to be paper loss unless this thing becomes zero. So if it drops, you get exercise, hold it. Just hold the USO ETF. Okay, one good thing about buying an ETF is the chances of it going to zero is okay lah. I think less than 0.5%. Less than 0.5%. All right. So this is the huge golden nugget that I just want to share with you guys today. And yeah, I hope you guys are learning something. Hey, Dennis, yes. Good to see you. And yeah, thanks for the compliment. So how long have you been investing and who do you learn from? Okay, interesting. Yeah, just to share a quick story. I actually learned from, I used to learn value investing from Mary Buffett. So who is Mary Buffett? She's the ex-daughter-in-law of Warren Buffett. And of course, I learned from some of the multi-millionaires in Singapore. Okay. So these are some of my mentor. Okay, if scared, just buy at 50 cents. Yeah, for Johnny. Exactly, man. Okay, if you're scared, just buy at 50 cents. Yeah, thanks, Silan. Okay, so basically that's exactly what I will do. So later on, after I finish up this particular Zoom call, I'm going to just execute the trade. Again, for Dennis, yes, I do have a program to share about the US market as well as how to take advantage of the bear market. So just watch for, I'll just put the link. I'll just put the link in the t.me. Okay, let me just put the link for my program. Okay, just if you want to find out more about the program that I have, just watch the video, watch the last 30 minutes. I share about the program as well. And of course, very important, okay, do join our Telegram. Okay, and most importantly, share with your friend, Ultimate Investor SG. Okay, this is where we share about the Singapore market. Okay, I even have a watch list, a list that I actually created to share what are some of the Singapore stocks that I'll be looking at. That you can actually buy right now that's undervalued. So like I said, local bank right now, huge bargain. Okay, but will they go lower? Yes, okay, they will go lower because why? More and more people are actually deferring their mortgage and more business are going bankrupt, even in Singapore. So will the bank be affected? Definitely yes, but there will be a limit. Like I said, the bank won't go bankrupt. So there's a limit to how low it can go. So I'm actually waiting for that. Yeah, so for those of you who have CPF, okay, if you have CPF, use your CPF to actually invest. Do you look at BNO or USO or BNO? I wouldn't say it is better or worse, but it is just a different ETF. So for you, very simple. If you want, you can diversify. You can go for both. So you don't have to determine which one is better. Okay, what is my personal view for Oxy? Okay, so same thing. Oxy is one of the company that Warren Buffett he actually owned in his current portfolio. So again, I think they will be highly affected because they're actually one of the independent oil and gas. So you can actually, I can actually do the same strategy, selling put on Oxy, okay, but the share price of Oxy is relatively higher. And like I said, if you invest in a company can go bankrupt. There's a risk that Oxy might even go bankrupt. But will the oil price index become zero? It won't go to zero. So if you look at the risk, the USO is a lot lower risk as compared to going for a company that is in the oil and gas industry. So that's my personal take on OXY. So Dennis, why don't you sell put with a longer expiry date? You can as well. Okay, but personally for me, I think shorter term, in fact, I don't mind holding the USO. So I go for 1 month, and then if let's say I really do get the stock at $2, I'm happy holding it. Yeah, so if you go for long term, then if the market recovered, you might not actually get the stock itself. Yeah, but I might consider also just buying them directly. So I'll see how it goes later on. But yeah, you can go for longer expiry. There's no right or wrong. It really depends on your personal game plan when it comes to investing. Yeah, I hope I have answered most of your question. Okay, I will be basically staying on until about 10:30. So I will just be answering a few more questions. So yeah, if you have any question, okay, now you can still post. I'll be here until 10:30. All right. So again, if you guys need to go off, okay, just feel free to go off. Again, I'm really happy that we have. In fact, I think we are full house today because Zoom actually only allow 100 participants, and I think at one point I saw that it was 100. So which means that there might be more people that wanted to come in. So they didn't actually they wasn't able to come in. Okay, let me just make sure that everybody is muted. Yeah, okay, let me see. What do you think of doing a synthetic call on this USO? You mean selling put and buying call? You can. If you know how to do that, then go ahead and do it. I think it's totally fine as well. Okay, but just remember when you're doing the synthetic, when you're buying, you are paying a lot of the premium. Remember the IB is high, so when the IB is high when you buy, you pay more for the value. So just focus on selling because selling gives a good return for now. Thanks, May. Andrew, how do you come to the selection of $2 as the strike price? Okay, again, I just take something that's cheaper. Like right now, it's about $3. So I just give it some room to drop because I believe that based on the momentum, it could drop down further. So for me, $2 is something that I'm comfortable owning. For some people, they might find that $3 right now is already a good price. So they might actually sell the put with a strike price of $3. And when you do that, you get to collect more premium. So again, no right or wrong. Just go for something that you're comfortable holding the USO at. From Zico, do you do this Zoom webinar often? Unfortunately, no. So yeah, like I said, I did this. Today's session is actually pretty special because we actually have 600 members in our Telegram. So I promised them that I will do this. So I actually do this for our student, okay, on a monthly basis. Okay, on and off, maybe when we have opportunity, I also do Zoom for my student as well. So that's why I think even right now, I think quite a number of our students are inside this particular Zoom channel as well. So this is also for them. I mean, when I see opportunity like that, I will actually do all this special Zoom session. How do you do sell put in E-Trade? I'm sorry, I'm not familiar with E-Trade. Yeah, so maybe you can check with your broker. Yeah, but basically it's the same lah. So if you want to do option, it can only be done on, personally, I know a few brokerage that allow you to do selling option. TD Ameritrade is one of them. Saxo, Interactive Broker. So far for me, I know these three. Okay, there could be more. Okay, but I'm not exactly sure. So from Nicholas, can we explain the difference between risk from $2 compared to 50 cents? Okay, very simple. When I sell a put at $2, I promise to buy at $2. So which means that I need to have $2 times 100. I need to have $200. So think of it that way. If I come out $200 and this thing becomes zero, my risk is going to be $200. But if I put a strike price of 0.5, so 0.5 means I promise to buy when the price is less than is 0.5. So 0.5 times 100 is only $50. So if I only come out $50 for this trade, my maximum risk is $50 based on one contract. Of course, if you go for more contract, then you could lose more than that. But if you're just looking at one contract, then that amount that you're going to lose maximum is going to be lower if you go for a lower strike price. Yeah, and of course, the price has to drop more in order for you to get exercise. If you go for $2, chances of it from $3 drop to $2 is higher. But chances of it from $3 drop to 50 cents is harder. So when that happens again, it is lower risk. How do you find stock with high premium to sell put? Again, I don't have the magic formula. So what happens is that right now we just follow the news. Right now everybody is talking about the oil. Everybody is, I mean, yeah, the whole CNBC is talking about oil, man. So naturally, when you look for oil companies, when you look for companies that is high demand, with high fear, that will be high IV. That will be high IV. So look for volatility, because high volatility will mean high premium. Okay, but at the same time, you need to understand, because some people just go for very high premium, but they do not know the risk behind it. So some stock, they have high premium because you are taking a lot of risk. But when I look at this USO, it's a different case, because again, it is almost at the bottom, and for the oil, it won't become zero. So I think in this particular case, it is very unique. Again, it doesn't happen often, so do take advantage of it. Okay, USO. Some experts say market will go down in September. What is your opinion? Again, I will let the market tell me whether it will go up or go down. So I mean, I do hear a lot of experts. Half of them say it will go up, half of them say it will go down. So I don't really follow so much. I will just see how the market move, and the market will basically tell me the answer. So during high volatility, it's not recommended to buy call or buy put. Yes, for Yao King, correct. Okay, high volatility, focus on selling option. Okay, when you see implied volatility less than 100%, just focus on selling rather than buying. What is the difference between trading US and OIH? Can Jenny share with me what do you, or USO? Between trading US and USO. So basically USO is the ticker symbol for oil. Yeah, so yeah, it's basically a ETF that is in the US. So that's the only answer that I can actually share with you. All right, okay, last 1 minute. So selling option from Lawrence. When I sell option, when will automatic assignment happen? Usually it is the last day, which for this particular example, 24 days, right? So usually it will be on the last day, which is day 24, on a Friday. So what is the assignment fee? It is $15, 15. Okay, there will be an assignment fee of $15 if you get assigned. Can you show where to see the volatility? All right, man, I'm going to fulfill your wish for Kenny. Is it Kenny? Yep, Kenny. Let me show you again where to see the volatility. So you can see, if you go to any of the stock on the right-hand side over here, percentage. So the higher the percentage, it means that you're going to collect more money. So right now you can see crazy, man, 400%. We can see just now is 8.18. Right now you're going to collect 0.19. So just now $2, I collect 37 cents. If you do it now, you get even more, man, 44 cents. So for every $200, you're going to get $44. So $44 is like my bank interest. Okay, I'm sure the bank don't give more than $44 as interest. So this is crazy, man. This is crazy. Okay, beside IV that you see, yeah. So IV is actually one of the things to determine whether do I sell option or buy option. Yeah, there are quite a few criteria So if you want to find out more, yeah, do join our program, because I can't possibly there's a lot of things to take note other than that, but that is just one of the key important things to note. Okay, yeah, so the premium is a confirmed return. Yep, correct. From Elingo, I just want to answer this last question. So when I sell put, okay, immediately I get this 37 cents. So this 37 cents is guaranteed. Okay, this 37 cents will immediately go to your account. So of course, I'm talking, if I go for one contract, it's going to be $37. Okay, so this is immediate guaranteed. So this money go into your account immediately. After I click the button, it goes to my account because I already bought this contract. I gave the promise, so I collect the money immediately. So, but this promise will last for 24 days. Remember, this promise will last for 24 days. So on the last day, if the price stay above $2, that's it, free money, I'm happy. If it drops below $2, then you collect it at $2 and wait for it to go up. If it go up to $5, you make more than 100%. You are also happy. Okay, so when you do this, you are both happy, regardless whether the price stay above $2 or the price go below $2. Okay, and of course, if you watch our Zoom, you are also very, very happy. Yeah. How old are you, Bowen Shifu? This is a, yeah, this is a secret. Yeah, but I'm quite young. I'm quite young. Okay, so thanks a lot, guys. Thanks for coming. Okay, once again, if you guys want to, okay, I'm going to do a huge shout out. If you all want more of such Zoom session, please help us to share our Telegram channel. Okay, if we reach 1,000 member, I will do another live session for you guys. Okay, when we reach 1,000 subscriber, please do it every week. Okay, yeah. So Silan, I look forward to see you in our community. Then I will do it not every week, also probably every 2 weeks. Yeah. So when we have 1,000 subscriber or member in our Telegram, okay, I promise you all to do another session like this, and hopefully we have a huge lobang during that period also. Okay, yeah, I know that you are inside, so please share with more people so that more people can actually benefit. Okay, we have another 4 more weeks where we are stuck at home. Ask them to join, because every day we will post something important, and I'm going to push out a lot of interesting video over the next 1 to 2 weeks. So watch out for our videos, watch out for our update on the news. Okay, 6 weeks, 6 more weeks. Okay, 6 more weeks. I mean extension of 4 more weeks. So technically, yeah, 6 more weeks. So hopefully no more after 6 more weeks. Okay, Poppy, 6 weeks is the final game plan. Okay, we want to go out and eat Hai Di Lao. Okay, so thanks guys. Okay, thanks Victor. Victor is our doctor, Dr. Victor. Thanks for helping us. Thanks for helping everyone. Okay, please invite me to the group t.me/ultimateinvestorsg. Okay, all right guys, thanks a lot. Thanks for coming. Okay, I wish you guys stay healthy, invest safely. Okay, and most importantly, please stay at home. Please stay at home. Don't go out. Okay, if you want to go out one person. Don't go out in groups. All right, see you guys. Thanks, everyone.